Hello everyone on YouTube. In this video, I'm going to talk about the most common biases that can ruin your investments. As we know, sometimes we make impulsive decisions or are influenced by our emotions and biases, which can be dangerous when we are investing our money. That's why I want to share with you some of the most dangerous biases you should avoid to have a solid investment portfolio. So don't miss it. Keep watching this video to discover how to avoid these common mistakes in investments and ensure a successful financial future. Let's get started. One of the most common biases among investors is the fear of regret. For example, you may find yourself in a situation where an investment seems too good to be true, but everyone else is doing it and you don't want to be the only one missing out. In the world of investments, it's important to learn to control your emotions and make informed decisions based on careful evaluation of risks and opportunities. By doing so, you can avoid falling into emotional traps and make more money in the long run. So, instead of following the crowd, take the time to educate yourself. This way, you can make smart investment choices that align with your financial objectives. Remember, investing isn't about getting rich quick, it's about building long-term wealth. By avoiding impulsive decisions based on fear of regret, you can avoid costly mistakes and achieve financial success. The second bias I want to discuss is loss aversion. Theory tells us that to make gains, we have to take risks. However, many people who suffer from this bias take more risks, not to increase their gains, but to reduce their losses. For example, when people are losing money on an investment, they often resist selling their investment even if they know it is very likely to continue to decrease in value, or they may even increase their investment to try to recover from the loss, which can be very dangerous. In summary, this bias can lead to making wrong decisions in managing our money and investments. Therefore, it's important to be aware of it and try to manage it intelligently and rationally, instead of being driven by our emotions. But beware. There is a deadly bias that can ruin any investment, whether for beginners or professionals: confirmation bias. It is a tendency that consists of seeking information that confirms our own beliefs, disregarding contradictory information. For example, if we believe that tech stocks will rise, we look for information that supports this idea and discard any information that suggests otherwise. And this becomes even more dangerous in the era of social media, where algorithms show us content related to what we've seen before to keep us hooked. This can lead to a distortion of our perception of reality and making wrong decisions. Want to avoid this bias? Learn to seek objective information and listen to those who think differently. Therefore, it's important to keep in mind that this bias can be very dangerous for investors, as it can lead to making irrational decisions based on incomplete or distorted information. Investors may lose money by not considering all perspectives or ignoring relevant information that doesn't confirm their prior beliefs. It is important to remember that successful investing is based on making informed and rational decisions, not on searching for information that simply confirms what we already believe. It is necessary to be willing to consider all perspectives and challenge our own beliefs to make well-founded and informed decisions instead of falling into the trap of confirmation bias. Confirmation bias can be so powerful that it can even lead some people to believe in conspiracy theories or completely false ideas. For example, there are people who believe that the Earth is flat, despite all the scientific evidence to the contrary. These people seek out and consume information that supports their belief, ignoring any information or evidence that contradicts it. Instead of relying on science and rigorous research, these people rely on unreliable or biased sources to confirm their belief that the Earth is flat. This is an extreme example of confirmation bias, but it shows how it can lead to dangerous and irrational beliefs and actions. In summary, although these emotional biases can be dangerous for investors, being aware of them and taking steps to avoid falling into their traps can help us make more informed and rational investment decisions. And that brings us to the end of this video. I hope you found it interesting and helpful in understanding how emotional biases can affect our investment decisions. On my channel, I'll be sharing more content about economics and finance, so if you enjoyed this video, please support this channel, and if you want me to explain any economic concept or news, leave it in the comments. Thank you for watching the video and see you in the next one.